What is good, guys? Welcome back to the channel. My name is Kozamir, and today we're going to talk about the market maker models, market maker trading model, how you guys can use it. I made a simplified model of this version, and I'll be showing you guys the exact things to use, time frames, stages, how you guys can anticipate low risk entries, having market structure shifts in a range as well, and times where we typically see liquidity being taken and the market starts reeling up. So before I start this video, guys, make sure you guys like and subscribe. If you guys didn't know my previous video, simplifying trading bias, I did go in depth with how you guys can use fair value gap patterns and how it would be easier for you to determine whether which fair value gap is a bet on, which is not. So if you guys didn't check the video, make sure you guys check it out in the description, and we start the stage. So this is gonna be the first stage that I'll be talking about, the market maker model. So this is gonna be one of the models that I'm gonna be showing you guys in this video. So when looking at the stages of a market maker model, usually we'll see price maybe taking out a buy side liquidity or trading into a PO. Could be on a monthly time frame or on a weekly time frame, depending on what time frame you guys analyze on. So typically when there's a PE array or buy side liquidity on top, we'll probably see, majority of the times we'll see original consolidation. This is where the market is a little bit more choppy. We can experience this for a whole month, could be for a few weeks or even few days, depending on how deep we are in the PD array and depending on what time frame are we trading on. So when this happens, usually the first stage that we would like to see is market trading below the original consolidation, taking out all these lows, and then we see our second phase that would be the distribution. Usually it also has a consolidation, but it's not as long as the original consolidation that we see. Market might probably make a low, consolidate a little bit, and they will probably be like another PD array, like a fair value trades back into that, taking out maybe like a lower high, and then we see continuation to the downside where we have our smart money reversal. So typically the smart money reversal does appear or are at places like a PD array on a higher time frame. Could be even if there's sell side liquidity resting below the distribution in the original consolidation phases, where we trade typically in the smart money reversal, and the market can a little bit consolidate. But then if we have a clear indication where the area can be left where the market trades above the smart money reversal area, there would be a PD array on a monthly or weekly or on a daily time frame that we can retrace back into, and then we have a low risk buy. If you guys are not familiar with this structure or this market structure shift model, I will be making a video explaining that as well. So after we have a smart money reversal, we typically have accumulation phase where the market trades higher, trades into some type of low or takes a low out, trading back into a PD array, trades higher, does the same thing, where we can have two separate entries, maybe like a third entry depending if we did take the low risk buy, and then we move higher, purging and taking out this consolidation, and then we start consolidating again, where we have an indication whether we're going to change the stage that we're in, whether it's going to be a buyer maker model or sell maker model. So let me get into the type of stages and the type of market maker models that you guys can use and see that's going to happen on the chart. Quick note on this one as well, we have the size of the curve where we have the red side. Typically this is when we wait for the market to trade back into the POI or the PD array that we want to see, and then the green area would typically be the places where we want to anticipate our buys or our sells. So just keep this in mind. This is going to be the size of the curve. We do not want to participate in the red side. It's either you can take the way down or take the way up. Sometimes people can take both sides, but I typically wait for the red side to do its thing, trade into a PD array, and then I anticipate my buys or my sells on the green side of the curve. So the first model I'm going to get into is going to be the market maker buy model. This is typically when we have our regional consolidation. Then we have our second leg. That's going to be our distribution. Then we take into our PDRA, into our smart money reversal, where we have a low risk buy happening somewhere here. And then we have our first accumulation. Then we have our reaccumulation, and then we purge into another high or PDRA, and then we consolidate afterwards. So this is going to be the market maker buy model, and then I'm going to show you guys the sell maker money model as well. This is going to be the market maker sell model. This is where we have our regional consolidation right here. This is going to be our two distribution phases where the market trades up the same way as we see trades up from our smart money reversal on a buy maker model. This is where we're going to have our accumulation, our reaccumulation, and then we have our smart money reversal on the sell maker model. This is where we anticipate lower sells probably around this area, taking out these lows by the smart money reversal. Then we have our first distribution, our redistribution, and then we purge back into PDR, or could be low sell side liquidity resting below, and then we will consolidate again. So the concept of this whole thing is to keep it simple. When we see our smart money reversal happening, we want to see a market structure shift happening like this, where we take out these relative equal highs, and the market is indicating after taking out sell side liquidity or buy side liquidity, the market must indicate that it's going to reverse itself. As soon as that happens and we notice that, there's going to be a PDRA, typically could be an order block or could be a fair value gap, and this is going to be our first entry. This is going to be our low risk buy, where the market typically doesn't trade back from this entry or doesn't take out these lows again by the smart money reversal area and then take us out and buys again. Typically we'll trade into a PDRA, then we see the purge, we see our accumulation phase 1 again. This is where we enter again. Could be swing trade if you guys want to do that, or could be just taking out maybe a 1 to 2 or 1 to 3. Market makes his first stage, we enter again, and then we have our second stage. You can enter there again, taking out another 1 to 2. This could be 2 perfect or 3 perfect trades that you guys can take to take this move. So the plan is to keep it simple and minimal. You guys just have to wait for the perfect time for these things to play out, and as soon as you guys see it and acknowledge the fact that we are having such indications, we might expect price to trade either higher or to trade lower. So let's get into the time frames, and so I can explain you guys how it works as well. So coming in on the time frame alignment, typically we want to use these time frames to make sure that we are in the correct side of the market. So if you guys are trading on a monthly PDRA, we want to use a daily market maker model. Could be a buy maker model or sell maker model. If you see a weekly PDRA, like a fair value or whatever we have, we want to use the 4-hour chart market maker model, typically seeing what the chart does on a 4-hourly chart and trade off of that. If we have a daily PDRA, we want to use the 1-hour chart, where there's going to be a buyer maker or sell maker model. Then we're going to use the 1-hour chart to determine that. If we are having a 4-hour PDRA, we want to use the 15-minute. If we have our PDRA, we want to use the 5-minute chart. And if we have a 15-minute PDRA, we want to use the 1-minute chart. So typically this 2 I would say works nice for indices, but this 3 works nice for indices or futures like NAS 100 and US 30. Forex charts is going to be, majority of the time, is going to be the monthly, weekly, daily, and 4-hour charts that we're going to use for these examples. I will be showing you guys one of the examples, how you guys can use that. I will be using it on a monthly time frame, and let's get into that teaching. So guys, I'm on the chart currently. I'm going to be explaining how the buyer maker model works. So we have a PDRA on the monthly time frame. We want to see price trade back into this monthly FVG, monthly PDRA. We're going to use the weekly and daily charts to see how we get our first leg, our low risk buy, and our second stage of the movement on the buyer maker model. So as you guys can see on this side right here, this is going to be our red side. Wait, this is where we waited, and the second cycle, the green cycle, this is what we will be trading off of. So With all that being said, let's get into the weekly time frame. We're going to wait for the market to leave this smart money reversal area like this. This is going to be an area that we are focusing on, right? So keep that in mind. I'll just put lows here. This will be our sell side for later. So let's get into the weekly time frame. So we have this consolidation pattern right here. Just want to make it clear and simple so you guys don't get lost. So this is going to be our smart money reversal. As the market moves, we see we have our first FEG taking out all these external range highs right there. This is indicating that we have a market structure shift right there. If you guys want to know how to trade this pattern, make sure you guys check out the previous video on how to trade internal range liquidity. So we have a weekly FEG right here. This is going to be our low risk buy. It's going to be our weekly FEG right there. So we're going to go on the daily time frame right there. This is going to be our first entry point. Typically the trade will look like this. So let's see how it moves. I'm gonna extend this. There we go. Back into this weekly FEG. I'm going to put my entries there, put my stops below these lows right here, so I can put it below these lows. I'll make it 150 like this, and then I'm going to target these highs. That's going to be our external range highs right there. See how the market moves. Gonna move my TP around there. We'll make it once a 2.2.5 till we wait. So we get our TP, but at the same time, I want to see after we taken out our first TP, we want to wait for the first stage of consolidation. So let's wait again. That's our first buy. And there you guys can see it's our first stage right here. From these highs, so these lows here. It's our first stage. We could wait for the market to trade back into this weekly fair value gap right there. It's gonna be our weekly FEG. It's gonna be our first stage of accumulation. So it's gonna be, I'll make it blue like that. We trade back into it. Let's go on the daily time frame. As you guys can see, we did have a market structure shift here as well. Just make this more perfect so you guys can see. We had a market structure shift there, taking out external range highs. We don't have perfect value gap pattern, but we have this fair value gap right here. It's also valid. Typically our entry would be here by this fair value gap. Put our stops below here. Put our TP by these highs. So I'll make it easier for you guys, where I'll put the external range highs right there, and we'll be taking out maybe like a 1 to 2, or we'll make it a 1 to 3 like this. See how the market moves. Taps back in. See the market moves. And there we go. Second trade, second TP has been hit. It's our second stage. And now we're in our PD array. We want to see the third stage that's going to happen. So if this is our low risk buy, this is our first stage. This could be our second stage right here, trading to this weekly FEG. Now we want to see a purge and consolidation again in the PD array to form our sell maker model. Mind you, I'm checking the weekly chart as we speak. So we have this range right here. I'll make this gold so you guys can see it clearly. Right there, this is our range right here, our consolidation. We see this candle right here, and this one. Take out our lows. Then we have our fair value gap right there, external range to internal range liquidity. This is going to be our weekly FEG right there. So we'll be anticipating the market trade into this purging consolidation, forming the sell maker model. So now the tides have changed from having this first green stage to now being our red stage like this. Now this is going to be our red stage right here. So knowing that, we want to see the market trade into this weekly FEG and then start having the distribution lower. Looks like the market has left us though. I don't think we're going to come back there, but if this buy didn't come out, we will be expecting our first stage. So this could be from here to this low to that. So first range right there. So I'm gonna make this one red. Continue that. See the market still consolidates. See the monthly chart. See we have our consolidation here. We have this fair value gap. We could trade into this right here. This is going to be the monthly FEG. Mind you, this can happen based on if we took out our first purge right there. So then that's going to mean our maker model could extend like this. So we break this, taking out this external range highs right here. We have multiple highs resting there below. See what the market does. See the market moves, still in a consolidation area. Let's go back on the weekly. We didn't tap into this monthly. We did take out this external range. We did see this nice fair value gap pattern. So it's going to be our first stage right here. Let's try to see if the market does trade back into this. If it does, then we're going to expect the chart to trade a little bit lower. So that's going to mean that we're going to take out these external ranges right here and probably trade into the sell side liquidity resting there. So we'll see what the market does. It left us as well, but we did manage to go to close to our external range liquidity. We see the market trade back into this fair value gap as well, but you guys get exactly the gist what I'm trying to say, where we have our buy maker model and then it changes from a buy maker to a sell maker model. So I hope you guys enjoyed this video. I hope you guys leave a like, subscribe if you guys can, and I'll see you guys in the next one. My name is Amir, and I'll see you guys next time. Peace.